Well, welcome everybody. Thanks for tuning in to this market update. This analysis is valid through to Monday, which is going to be the 3rd of March 2014. What I'll do for you in this short video presentation is just present to you my views on the market, taking a look at the Dow Jones Industrial Average, followed through with a couple of our individual trade setups which look good for the week ahead. Firstly, what I want to sort of bring to your attention is the fact that the Dow Jones Industrial Average is really struggling to make it up to our ultimate target here at 16,470. This is historically very strong resistance, and we expect the market, once it reaches this high here, to actually slow down and start to consolidate sideways, at least pick up with a little bit of selling volatility into the market. Once we get to the 16,470 level, it really provides us with a fantastic bracket trade setup. In other words, you need to remain neutral and set your bullish trigger above old resistance, which is where ours is located here at 16,665, and also set yourself up for a bearish trigger in the event this market cycles down. Having said this, if the market does cycle down from this resistance level, what we're actually doing is setting up what we call a consolidation zone in the Dow Jones Industrial Average. Now, this consolidation zone could well be what we call a distribution. Now, distribution itself, it takes form at the end of a bullish move. Much like we had consolidation here throughout the period of 2013, this was actually a little bit of accumulation taking place. Now, as you can see, the market's actually broken out. It's really made a new higher high. However, the big thing to deal with at the moment, and what's very, very interesting and exciting to see, is the fact that we've set up a lower low on the Dow Jones Industrial Average. This is telling us that potentially market sentiment, market participation is starting to shift. All right, it's not there yet, but from the event, and when we do make the target of 16,470, again, this sets us up for a bracket trade. Either the Dow Jones Industrial Average is going to break out and make new all-time highs, much like the S&P 500. The Nasdaq is already trending above a very, very important resistance line. Really, the next target on the Nasdaq, anyway, is the all-time highs made back in 2000. Let me just change to a weekly and show you what I'm looking at. As you can see here, let me just zoom in a little bit. Where the Nasdaq's trading at the moment is really around this resistance level, which acted 3 times during the period of 1999 to 2000. All right, we're above it now, but if this Nasdaq and the markets actually want to break out and trend higher, there's a lot of profit opportunity and bullish upside potential on the Nasdaq. The next trigger really is around the 5,100 level, which is going to coincide with the all-time highs. At the moment, we do not have agreement amongst all 3 of our markets. As you can see, the Dow Jones Industrial Average is still potentially setting up that lower high compared to where the Nasdaq is trading, and also the S&P. If I just bring it up, we are now edging out all-time highs on the S&P 500. So although the markets aren't in agreement, they are some fantastic trade setups, and also, again, bringing to our attention anyway, the theme in the market transition leading and throughout 2014. If we go through some of our top 12 individual trade setups, a lot are very neutral, a lot are consolidating sideways, and a lot are also sort of at a stage in the cycle where there isn't really too much of a trade setup. As you can see, here's Apple in green are some entries. We are expecting a little bit of sideways congestion before we get a Bollinger Band squeeze, which is ultimately going to break out higher or break down lower. Targets are in orange. Entries are in green. You can see with Amazon as well, similar setup. We are still, if I just change to the exponential moving averages, you can see that we're just pulling into the 20 and also the 50 exponential moving average. We are at a gap, which is going to act as resistance, and we are also at a resistance level. So expect Amazon to rally up a little bit higher, and then look for bearish candlesticks, which are going to allow you to get into a bearish trigger and trade down to this level about $340 a share. Pretty excited about Amazon. Moving on to AXP. AXP slowly grinding higher. We are grinding higher in the face of incredibly strong bearish divergence. As you can see down here on the MACD indicator, and the new highs made on AXP pertaining to that earnings gap, we have filled the gap, which is very, very bearish. It's a very cautionary signal, and we're struggling to make it up to those old resistance levels. So expect AXP, once we hit resistance, to slow down again and potentially roll over, setting up another nice little sideways consolidation, or in other words, what we call a channel. Baidu, interesting, very, very tight range. We do have what we call a one black crow soldier candlestick pattern, and again, we've Baidu actually set up the trade 163.47, 186.12. Either way Baidu wants to move, we're going to be on the side of the trade. If you look at the exponentials, they are set up for that downward move. You've got the stochastics cross in those overbought levels. You've got the RSI turning down, and the MACD sort of starting to plateau right around this level. So excited to see which way Baidu wants to move. Same with Caterpillar, very neutral directional setup. You can see the entries in green, just waiting for that confirmation of price to actually alert us and trigger us into those trading positions. FAS, not a whole lot to talk about. We are limited on the upside. Google, again, just continuing with that bullish trend. If you want to get into Google, look for a buying opportunity off these exponential moving averages. That's where the lowest, or where you can mitigate your risk for the most reward to the upside. Moving on to HD, nice little bullish earnings gap, which we saw last week. Again, we're getting a lot of high wave spinning tops right around these very important resistance levels. If HD wants to break out above the wick of Friday's candlestick, run with it, trade in the direction of the open window. The open window is up, and we are getting what we call a bullish exponential moving average cross. All we need for it to happen is just get a close above these old resistance levels, and you should be golden on that HD trade. JPM, a little bit of a shorting opportunity last week. However, the downside potential is a little bit limited. We do have targets down here, $55.54 a share. However, we are battling against this upward trajectory. This primary trend is definitely up. We can catch a little bit of an intermediate swing down into that primary bullish trend, but once we hit it, as you can see during 2013, the perspective that you need to have has to shift from that of a sideways market movement, right, into what we call a bullish breakout. Now we're getting very close to that on JPM. Will it happen this week? I'm not too sure, but again, as you can see, my bullish trade setup on JPM isn't until we break above $60.10 a share. Netflix, again, stair-step patterns continuing to move higher. If I zoom in on the detail, you can see very nice and tight congestion areas before we get that bullish volatility breakout pop. Again, you can see that we're just simply trading into a little bit of a sideways tight zone, and we expect, if Netflix is to break out, a very good opportunity to get in about $459 a share. Pay attention to those exponentials. Once we get quite a ways away, especially from that 20 and also the 50, generally shares like to correct. All right, they like to correct. But having said that, looking at the NASDAQ, there isn't too much resistance holding us back from making, or from letting anyway the NASDAQ move higher. So if you're looking at the NASDAQ and saying to yourself that there is a lot of bullish potential, what you want to be looking at are the actual tech stocks, the ones like Apple, the ones like Amazon, the ones like Baidu, the ones such as Google, and the ones such as Netflix. So they're the tech stocks, the big tech players, which are going to drive this market higher. What you need to translate that through to is to change your perspective from that of more of a bullish perspective, and looking at getting into bullish trade setups with low risk. Okay, moving on to Starbucks. Starbucks is sort of anti-tech at the moment. As you can see, we've transitioned from a bull market or a bull trend into that of a trend which is now making lower highs and also lower lows. We are in this trade bearish. We're very close to our ultimate target on Starbucks, and we've reset the trade up again to continue to make that fourth lower low, which is going to come down somewhere about $67.16 a share. XOM consolidating sideways above the exponential moving averages. This could go really one of two ways, or only one of two ways: above $97.53 up to $100 a share, or below $93.81 to at least $90.33 a share. So please stay patient, remain disciplined, and wait for the trade setups to come to you. You do this analysis over the weekend so that once the trading week starts, you have a plan and you can just simply trade that plan for the week ahead. All the best, everyone. That is a market update leading into, again, the 3rd of March 2014. Thanks for watching this video. If you want to learn technical analysis, apply for a scholarship. It's free. You'll get immediate access to 8 classes, about 12 hours of free trading content, setting you up anyway with a good educational foundation for you to tackle the markets autonomously. All the best, everyone. I'll catch you during the week for a midweek market update. Goodbye.